Scott, welcome, and why the downgrade?
Hi, Kelly. Yeah, so I think the downgrade is just kind of as you said. I mean, we see growth at Amazon this year, but just a lot slower now that we've had COVID and the economic kind of unwind that we're seeing. So I mean, you look across their businesses, especially their profit-making businesses like third-party seller services, subscription services, which is really the Prime membership, AWS, and advertising. We think all those slow down this year and profits slow down.
So the interesting thing about Amazon, like we've said, is that it's bucked the trend. You know, a lot of companies, they say, okay, profits are down, the stock is pricing that in. With Amazon, it's a little bit different story. Is there a disconnect between what is priced in the stock today in terms of profitability and what you think is actually possible? And do you think the earnings this week could be a wake-up moment in that sense?
I mean, I think earnings are going to be pretty good. I think the question is, what will the outlook look like? What will the company say? I mean, expenses are going through the roof. They've added a lot of employees. But I think it gets back to your actually prior interview and what does the consumer economy look like as we get into the fall? And I guess our view is that the sailing ahead could be pretty rough. I mean, we got a presidential election. We could have COVID reemerging. The Fed has done unprecedented things, and so has fiscal stimulus. So we think the outlook into the back half of the year is likely to be challenging. We're talking about unemployment rate over 20%, economic contraction, and maybe in the second quarter as much as annually at a 40% rate. So I guess we're just in the minds, and R5 does both research but also do a lot of consulting, and we're talking to our consulting companies, and they're all really worried. So I think our outlook is probably less bullish than a lot of people out there. And Amazon is a big company. It's got tentacles in everything.
Right.
And so our thought process, I mean, something that people probably don't know, but Amazon actually has a growing food service business. And of course, all the restaurants are closed. Amazon Business Prime is a big part of their business for their 1P. So, this company is likely to slow. We don't think the stock was up about 30% when we downgraded it. It was one of our top picks. We just don't think it can avoid what's going on in the broader macro.
Sure, and it's interesting because I actually was going to ask you if reopening would be more of a headwind for Amazon. Once people leave their houses again, they obviously don't get that benefit as much. Now they've hired everybody. They're left with lower demand. Maybe they're in a pinch there. But you're kind of saying, I wonder if what you're saying is they're in a pinch either way. So if the economy turns lower, they suffer. And if the economy is stronger because of reopening, could they also suffer?
Yeah, I mean, that's such a perceptive question because in some ways, yes, that's kind of what we're saying is that, if, they're part of the broader economy, they'll suffer. But if we do reopen much faster than we think, it's not that Amazon won't do well, it will. But from an equity perspective, there's certainly other companies that will likely see a sharper rebound. And even though the stock would probably go up with the broader market, it would probably go up a lot less as people rotate into names that will benefit more, some of the restaurants, some of the other discretionary retailers.
One final question while we have you here that kind of relates to all of this, but I guess if Amazon's not going to work as a great trade for the rest of the year, I wonder about all of FANG, and obviously we're going to hear from Facebook and Alphabet this week, but they have certainly seen advertising declines. Is it possible that this is the end of an era for FANG in general? I mean, there are people out there who say, look, these are the only companies that can win in this kind of economy, and I wonder if you would see it as maybe the opposite.
Yeah, I mean, again, all those companies, I'm not going to try to call the end of FANG. I'm not sure. That's maybe above my pay grade. But, what I'd say is, generally speaking, as we look at the unprecedented environment that we're in, it's like nothing we've ever seen. And the potential outcomes are very wide. All these companies participate in the broader U.S. economy in a major way. And so it's hard to imagine that you're going to have 20% unemployment, yet everything's going to be okay at some of these mega tech companies. Advertising is a perfect example. And one of the things we looked at with Amazon, advertising is slowing down. And, Facebook had some comments on that. Advertising is one of the first things these companies have cut. CapEx is getting cut all over the place. That goes to AWS. That certainly would hurt, go to Google, which is big in that area. So I would just say that, these companies do participate in the broader U.S. economy, even though they may be relative outperformers, their businesses are likely to slow.
No, it's a good point. Scott, thanks so much. Again, Scott Mushkin is the only one on the street with a sell on Amazon right now.